Hi, welcome to Golden Brokers. My name is Ariff and today I am going to talk about a stock JP Morgan Chase. JP Morgan Chase & Co. is a leading global financial services company that has been serving millions of customers and clients for over 200 years. Headquartered in New York, the company operates in over 100 countries and offers a wide range of financial products and services through its four major business segments: consumer and community banking, corporate and investment bank, commercial banking, and asset and wealth management. It all started back in 1799 when the Manhattan Company was chartered by the New York State Legislature to supply drinking water to the city's growing population. Among its founders were Alexander Hamilton and Aaron Burr. The charter allowed the Manhattan Company to use its surplus capital for banking operations, and within 5 months, the Bank of Manhattan Company opened for business, becoming the second commercial bank in New York City after Hamilton's Bank of New York. Fast forward to 1871 when JP Morgan & Co. was founded by JP Morgan, who launched the House of Morgan on 23 Wall Street as a national purveyor of commercial, investment and private banking services. In 1955, the Chase National Bank and the Bank of the Manhattan Company merged to form the Chase Manhattan Bank, creating what was then the largest bank in America and the world's largest banking institution by assets. The history of JP Morgan Chase is one of innovation and leadership in financial services. In 1996, Chemical Banking Corporation acquired the Chase Manhattan Corporation, retaining the Chase name as the public brand. The merger combined two of New York's oldest and largest money center banks, both with long histories of innovation and leadership in financial services. And finally, in 2000, JP Morgan & Co. merged with the Chase Manhattan Corporation, forming JP Morgan Chase & Co., one of the world's largest and most respected financial services company. JP Morgan stock opened at 134.96 on May 5th, with a day range of 131.81 to 135.72 and a 52-week range of 101.28 to 144.36. As of April 14, 2023, the stock had a short interest of 17.19 million shares and an average volume of 14.39 million shares traded. JP Morgan stock price showed some volatility over the past few months, with a slight decrease over the past 5 days but an overall increase over the past year. Looking at its recent earnings report, JP Morgan Chase reported its Q1 earnings with net income of $12.6 billion and earnings per share of $4.1, exceeding analyst expectations. The record revenue of $38.3 billion was driven by strong performance in consumer and community banking, commercial banking, and asset and wealth management. The company had credit costs of $2.3 billion, which included a $1.1 billion net reserve built and $1.1 billion of net charge-offs, and was prepared for a range of scenarios given the uncertainty in the economic outlook. The company's average loans of $1.1 trillion increased 6% year-on-year, and its average deposit of $2.4 trillion decreased 8% year-on-year. The company had cash and marketable securities of $1.4 trillion, which represented 37% of its total asset, and said it had ample liquidity and capital to support its clients and communities. The company had a return on equity of 18% and a return on tangible common equity of 23%, reflecting its strong profitability and efficiency. JP Morgan assets and liabilities have steadily increased from 2019 to 2022, resulting in a higher debt-to-asset ratio, indicating a more leveraged position. The company experienced positive cash flow from operating activities each year and invested heavily in its business, resulting in negative cash flows from investing activities. Revenue and net income have fluctuated and the profit margin has declined slightly. Despite challenges facing the banking industry, JP Morgan remains a strong player in the field. Based on chart and technical indicators, JP Morgan Chase stock experienced consolidation ahead of the first quarter earnings report and broke out after better than expected earnings were reported. However, the stock retraced to the lower side after entering a supply area due to higher selling pressure resulting from recent regional banking turmoil. Although the stock is in an uptrend, caution is advised as it moves in the lower section of a long-term uptrend parallel channel. Technical indicators mostly show a buying signal except for ROC and stock RSI, which are more sensitive indicators. Overall, there is a higher chance on the upside rather than downside based on technical alone. So, is it a buy? I believe there is some fundamental reason as to why the company could be a potential buy. JP Morgan's deposits have increased as a result of the recent SVB financial debacle, with depositors moving to larger banks like JP Morgan instead of taking risks with smaller banks. JP Morgan's strong liquidity position, including 733 billion of high quality liquid asset and a liquidity coverage ratio of 112%, has helped it weather the potential bank run. The bank's excellent liquidity sources suggest that any losses it may incur from available for sale securities and held to maturity debt securities may not be realized. JP Morgan is acquiring First Republic Bank for 1.8 billion, which will give it 92 billion in deposit and 173 billion in loans and securities. The FDIC will absorb most of the losses on the loans and provide JP Morgan with a 50 billion credit line. The acquisition will add over 500 million of profit annually to JP Morgan's, and it will retire the First Republic brand. However, acquiring FRC puts JP Morgan in a unique position where a single banking corporation holds more than 10% of whole US deposit, and more regional banks are expected to collapse, making their assets available for giants like JP Morgan to purchase. JP Morgan's Timberland Fund has bought 250,000 acres of forest for over 500 million, with some of it to be used for wood production and the rest left for carbon offset to take advantage of the tax credit 45Q. The trees on the purchased land are expected to capture around 500 million tonnes of carbon every year, which could be sold as carbon offset for much more than the annual tax write-off of 67.5 million. This is part of JP Morgan's goal of investing 2.5 trillion into ESG between 2020 and 2030. Thank you for watching. It has been Ariff with Golden Brokers and happy investing.